Welcome back to Hong Kong and the Credit Suisse Asia Investment Conference, where I'm joined by Rob Shafir, the head of asset management, Credit Suisse. Rob, thanks very much for joining us.
It's great to be here.
Asset management has made a lot of progress on a number of different fronts, growing net new assets, assets under management, portfolio restructuring. We're here in Hong Kong. What role does Asia Pacific in general play for carrying forward those goals in 2011?
I think Asia is going to be an incredibly important part of our strategy. I think the good news for us is that we know where we're going, and we have focused our business down into its three core pillars. The first one being our Swiss businesses of asset allocation and all kinds of portfolio construction, advisory businesses, and so forth. The other two major areas are alternatives and emerging markets. And both alternatives and emerging markets in particular are going to play very large roles, both from a product perspective as well as from a client perspective in the Asian region. So from a product perspective, we've got some very interesting joint ventures here in the region, specifically in the private equity side. We've got a joint venture with ICBC on the long-only side of the business. We've recently announced a partnership with HDFC for India. So, we see several opportunities both within our own framework as well as to partner with some local players to build out our capabilities in asset management in the Asian region. On the client side, for all of our products globally, we see huge opportunities here because obviously the clients are getting bigger. We're starting to see these clients re-risking assets and going outside of their home markets and looking for opportunities around the world. And we think that we can be one of the global providers for several of the largest institutional clients, as well as for the private clients that our bank continues to attract and grow with.
And apart from that shift, that geographical shift that you just mentioned, are investors also starting to take a renewed focus again on alternatives as an asset class?
Yeah, we're definitely seeing that. I think you obviously had the financial crisis where everything got shaken out, and it took some time to recover. But as you start to see people begin to re-risk assets, I think there's definitely a place in portfolios for alternative assets. If you look at their risk-adjusted returns, if you look at the correlation of their strategies, if you look at really just the different risk-return profiles of some of the different types of things that alternative products can offer investors, we think more and more investors are coming back into the alternative space. The asset flows have been positive for the last couple of quarters. You're seeing it first with the more sort of sophisticated institutions, and that's starting to play out throughout the world. And also the private clients are being somewhat more conservative but following behind the institutions. I can also tell you that over the last several days I've visited several of our largest clients in the region, and I will tell you that more and more we're seeing them starting to deploy assets on the margin into the alternative space. So I think it's early days in the redeployment of assets into alternatives, and I think that trend's going to continue for quite some time.
Does that also apply to real estate? Because in the past, Asia was a central focus for lots of instruments around real estate.
I think it does. I think it's probably earlier days because some of the real estate markets are not quite as developed as some of the more traditional alternative strategies, like private equity, for example. But more and more we're seeing interest in real estate, and both in terms of investor demand and opportunities, because whether it's in developing markets which are just really starting to grow their real estate opportunities, or in distressed markets where there's very interesting opportunities for investors as well. I think the global real estate story is going to be a very interesting one in the next couple of years.
And you'd mentioned partnerships. Perhaps you can tell us where we stand on our partnership with York and how we can take it a step further.
I think partnerships are a part of our strategy. So our philosophy towards our investment products is that if we can do it better in-house, we'll do it in-house. If we think that we have a better answer for our clients, we will partner. York is an example of that partnership. They're one of the premier players in the event-driven and the active credit space globally, and it's an excellent partnership for us. So I'd say it's early days, but it's going very well. We are like-minded in terms of where we see the business going, and we think that matching their investment capability in that particular space with our global reach, whether it's from a client perspective, with our institutional as well as private clients, as well as from a deal flow perspective, the ability to sort of match strength to strength between what Credit Suisse is and what York is, can be a very powerful combination for us.
Thanks very much for your time.
Okay, thank you.
That was Rob Shafir, CEO of our asset management here in Hong Kong at the Asia Investment Conference.